This is the Daily Market Comment by Rafi Boyajian. I'm Maria Readies. Thanks for joining us at XM.com. Investors hoping for fresh clues from the Fed about how it plans to ride through the storm in bond markets were left disappointed on Thursday after Chair Jerome Powell offered no new insight. Speaking at a Wall Street Journal-hosted event, Powell mostly stuck to the current script, reaffirming the Fed's commitment to not take its foot off the gas pedal until there's been substantial further progress towards its goals. But as the U.S. Senate readies to pass a humongous $1.9 trillion stimulus package, vaccinations gather pace, and business surveys point to a buildup in inflationary pressures, investors are not convinced. Powell's only attempt to address the steepening yield curve was when he said he would be concerned by disorderly conditions in markets. However, this didn't appear to go far enough in calming jittery markets, and the sell-off in treasuries resumed. As expected, shares on Wall Street took a dive as yields began to surge. The tech-dominated Nasdaq Composite was again the biggest casualty on Thursday, followed by the S&P 500. E-mini futures were trading 0.3% lower at the European Open today, indicating that worries about overvaluations continue to weigh on equity markets. After yesterday's losses, the Nasdaq Composite is now flirting with correction territory, having dropped more than 10% at one point from its all-time high above 14,000 in February. The US dollar has soared to three-month highs against a basket of currencies today. The rally in the dollar index is being driven by the Greenback's advance against the Japanese yen as the pair races towards the 109 level. But it's not just the yen that's on the slide, as the dollar is crushing all of its rivals following Powell's remarks. The euro has plummeted below the $1.20 level, and even the bull-charged pound and Australian dollar are plunging. The only thing that can stand in the way of the mighty dollar right now is probably a bad jobs report. The latest non-farm payrolls print is due at 13:30 GMT. In commodities, gold licked its wounds near 9-month lows on the back of the latest jump in the dollar and bond yields. However, oil prices were in a bullish mood after OPEC and its Russian-led allies decided to keep output unchanged for another month. WTI and Brent crude were both trading about 2% higher to reach levels last seen in January 2020. This is today's Daily Market Comment. Thanks for joining us at XM.com.